So when you look at America's financial history, the standard narrative, it always focuses on the big names.
Right. Treasury secretaries, presidents.
Exactly. Presidential policies, landmark legislation. But what if that's not the real story?
What is it just the surface?
Yeah. What if the actual foundation, the financial skeleton holding the whole economy up, was built by just a handful of families, people who operated completely in the shadows long before the government even had the power to do it?
Well, that is the central, and it's a pretty audacious claim we're diving into today.
It really is.
Our sources argue that the true economic infrastructure of the United States wasn't established by government, but by what they call invisible bankers.
Invisible bankers.
Generational dynasties of old money power. And we're not talking about modern wealth here. This isn't your, Silicon Valley billionaires or the big faces on Wall Street. This is about foundational control.
Okay, let's unpack that timeline because that's crucial. You're saying we're not talking about, like, the Gilded Age tycoons?
No, much earlier.
We're talking about families whose influence was so deep that they were already controlling money before America even had a dollar.
That pre-existence is the absolute key. It's the whole insight.
So what does that mean, controlled money before the dollar?
Well, it means they control the actual instruments of capital. They managed the colonial debt that was owed back to Europe. They set up the first real mechanisms for credit.
So like IOUs, promises to pay.
Exactly. The very things that served as currency back then.
Uh-huh.
And they controlled the lines of foreign exchange, which you absolutely needed for trade.
So the United States wasn't born into some kind of economic vacuum.
Not at all.
The founders weren't just starting with a blank financial slate. They were essentially building a government on top of a system that was already there.
A privately managed system of capital. That's precisely it. I mean, imagine the U.S. is a new tenant moving into an old apartment building.
Okay.
The tenant can, pick out the furniture, they can repaint the walls. That's your legislation, your economic policy.
Right.
But they can't change the plumbing. They can't change the electrical wiring in the walls. That hidden stuff, the systemic utilities, they were already installed. Oh. And they were owned by these private financial interests.
So the mechanisms of debt, of lending, they were inherited, not invented by the New Republic.
Yes. It fundamentally reframes those early years. It wasn't just about printing a new currency, the dollar. It was about how you integrate that new dollar into a financial grid that was already established and privately controlled.
So the government could say, this dollar is real, but it was the invisible bankers who actually controlled where the capital flowed.
That's the critical distinction. It addresses the nature of their power. You see, early American politicians, they had political authority. But these families, they had liquidity authority.
Liquidity authority.
They decided who got credit, how much they paid for it, and what assets you needed for collateral. They set the foundational rules for economic scarcity and for expansion that really every generation since has had to follow.
Which is such a sharp contrast with how we think of power today. You think of a financial titan now. You picture someone with enormous, very visible personal wealth. It's tied to a brand.
Bezos, Gates, Musk.
Exactly. So why does the source call the power of these older families invisible?
Because modern billionaires, they operate on what you could call transactional wealth. They build up capital through, highly visible market activity. They are the face of a company or an innovation. The invisible bankers, though, they were doing something much deeper. They achieved systemic architectural control. They didn't need their name on a building because they were the ones who drafted the blueprints for the entire banking structure in the first place.
So the power shifts from owning a big company to owning the system that lets all the big companies function.
Exactly right. Their influence is baked into the operating system. Think about a key financial mechanism, like fractional reserve banking.
Right.
When a private bank can lend out many, many times the amount of capital they actually have on hand, they're essentially creating capital and the debt that goes with it out of thin air.
And that's totally independent of the government printing money.
Completely. So these dynasties didn't need their names on the bank. They just needed to make sure the legal and financial framework allowed that mechanism to exist, to perpetuate their control over the debt cycle.
The genius of it is that the power is invisible. It guarantees that capital keeps flowing into their established channels, no matter who is in the White House or what new tech company is on top.
And that infrastructure, that ability to create and distribute credit on a massive scale, is what gave them the systemic leverage to shape the entire American landscape, which leads us directly to the source's most staggering claim,
Which is?
that these dynasties shaped the three pillars of national development: wars, cities, and presidents.
Okay, that is a huge claim that needs some real substantiation. So let's start with wars. If they control the capital, how does that translate into shaping military conflicts?
Well, war, at its core, requires massive, immediate, centralized debt. A government can't just fund a war with taxes in the moment. It's too slow. They have to borrow.
And if you're the one controlling the credit,
If you are the private entity controlling the mechanisms, the ability to structure and underwrite these enormous national bonds, you effectively dictate the terms of the war. You can even dictate the necessity of the debt itself.
so they didn't just passively loan the money, they were designing the very instruments of national debt that the U.S. would need to fight, say, the War of 1812.
Yes. And by designing the instruments, they embedded their influence for decades to come. They made sure the repayment structure favored the private financiers over the public interest, which guaranteed a long-term, predictable revenue stream for their families.
They created a demand for their own services.
They did. War meant massive, profitable government debt. And it also meant you needed federal banking institutions to manage that debt, institutions that were, in the beginning, heavily influenced by or even controlled by these same private interests.
So that's financial leverage turned directly into geopolitical influence. Fund the war, and you guarantee the creation of the national institutions you need to service your own debt. It solidifies your control.
Makes perfect sense.
Okay. Now, how does that same logic apply to shaping cities?
If you control the capital, you control infrastructure. It's that simple. Wars create debt, sure, but prosperity needs infrastructure. We're talking canals, ports, railroads, and later on, city planning, major land deals.
And all of that requires huge amounts of upfront capital that the early American government just didn't have.
They couldn't provide it. So the dynastic families, they financed the building of the country, not just its wars.
So they were picking the winners.
They were literally drawing the map for future commerce. They decided where the railroads went, which ports got the crucial financing to expand, where the big land speculation would be centered. When they chose to finance, say, the Erie Canal or certain rail lines out in the Midwest, they were creating the future urban hubs like Chicago and New York.
So public policy might, regulate the speed limit?
But private finance built the road. The whole development was structured to maximize the return on their capital, and that naturally dictated the flow of commerce and people, creating the urban structure we still live with today.
That's fascinating. It suggests the growth of early America wasn't just organic or democratic. It was strategically directed by capital, creating commercial choke points designed by private banks.
Which brings us to that third pillar, presidents and politics.
Right.
If these financial interests controlled the money for war and the capital for development, they inevitably had leverage over the highest office in the land.
And it's not necessarily about, explicit bribery or some backroom conspiracy.
No, it's subtler than that. It's more systemic.
It's about controlling the economic levers that determine whether a president succeeds or fails.
Exactly. If a president needs to fund a war or stabilize the currency or finance a huge project like the Transcontinental Railroad, they have to go to the sources of capital. When you control the nation's credit, you control policy.
So you ensure the banking acts that get passed are favorable to your structure.
Yes. For instance, the whole fight over creating a central bank in the early days, that was the battleground. That's where these invisible bankers made sure the foundational framework protected the mechanisms they'd already established before the dollar even existed.
So they weren't just lobbying for a single bill. They were setting up the entire financial ecosystem so that any policy would have to conform to their reality of capital control.
And that becomes the financial skeleton that gives the entire economy its shape.
An enduring shape.
The skeleton is made up of those lasting, often invisible structures. The rules that govern how debt is created, the way international capital flows, the necessary role of private institutions in public finance. It's what keeps the system running no matter who is temporarily in charge of the government.
Okay, let's bring this all home for the listener. How does a framework built by invisible financiers hundreds of years ago, this historical skeleton, how does it still cast a shadow over our modern financial lives, and specifically our everyday paycheck?
Because the basic architecture hasn't really changed. When you look at your paycheck, you see taxes, deductions, fine. But you're also relying on the banking system underneath it. All the way money moves, the interest rate you pay on a loan, the stability of the currency, inflation, all of these things are behaviors that are dictated by the rules that were established within that original skeleton.
It's like the difference between a high-frequency trading platform and the physical server rack it sits on.
Mhm.
The platform is modern, it's visible,
Yeah.
but the invisible dynasties, they built and still own the essential server infrastructure.
That's a great analogy, exactly. If the initial rules allow private interests to benefit structurally from national debt and fractional reserve banking, then every regulation passed since then is just working within that original framework.
You're just tweaking the settings.
You're just tweaking the settings, the terms of your mortgage, the fees on your bank account, the inflation that eats away at your savings. These are all downstream effects of mechanisms that were established, not necessarily for the public good, but for the predictable, compounding control of dynastic capital. They built the game board. The pieces might change, but the squares and the paths, they stay the same.
It's a really compelling argument that the nature of real financial power is its longevity and its deep lack of visibility. It operates totally outside the celebrity culture of today's billionaires.
That is the defining characteristic of old money power.
They built the rails, and the trains still have to run on them.
The endurance of that infrastructure is the most important point here. I mean, modern finance is incredibly complex. It's digitized, but its fundamental principles, how debt is created, managed, monetized, are rooted in that historical skeleton.
And as we wrap up this deep dive, we have a final provocative thought for you to consider.
If we accept the source material's claim that the foundational economic rules of the U.S. were laid down by invisible private interests before the government and the currency were even fully formed, it raises a really profound question about governance itself.
Which is,
How much of our current economic decision-making, whether it's through new regulations or political mandates or public spending, how much of it is genuinely democratic and responsive to the public interest? And how much of it is just the continuous maintenance and inevitable reinforcement of that original, deeply buried financial foundation? Are we fundamentally building a new economy, or are we just managing an inheritance?